50% of all Americans have some or most of their Social Security taxed by the feds, the IRS. There's also some states that tax your Social Security. And what you want to know is how do they calculate that? And what can I do to lower my taxable income? So we'll talk about that. If you are married and you make less than $32,000, you're not going to have to pay any taxes. Now, Social Security Administration will send you a 1099 every year. And you're like, a lot of people when they first get the Social Security, why are they sending me this? That is your first indication that your Social Security might be taxed. And if you do have to pay taxes on it, there you go. There's how much you made a year. So if you're a married couple filing jointly, less than $32,000, no problem. If you make up to $44,000 jointly, then we're into the taxes. 50% of your Social Security will be subject to tax at your tax bracket. So people, they hear that and they think, I'm being taxed at the 50% tax bracket? No, that doesn't exist. You're being taxed at your tax bracket. Hopefully you're at a lower tax bracket. But we have to back up here because it's not as simple as did we make $44,000? They don't go by your adjusted gross income. They go by something called your combined income because the government they knock themselves out to make this as complex as possible, right? What is combined income? That is your adjusted gross income, which you're familiar with. Then they add back in half your Social Security, okay? This is all just to determine if your Social Security is taxable. This is just their wacky formula. They add back in half your Social Security. Then they add back in some non-taxable assets, which completely blows your mind. This is like black magic, how they came up with that. So for example, if you have municipal bonds are tax-free. So you have growth that you're not taxed on, but they're using that amount to figure out if they're going to tax you on your Social Security. You're not being taxed on your non-taxable assets like growth in a Roth IRA. You're not being taxed on it, but they're using that. It's unfortunate. So they're having your adjusted gross income, half your Social Security, adding back in some of your taxable income. That creates your combined income. And that's what these charts are based on. What is your combined income? And a lot of you, it's going to be simple. It's just your adjusted gross income because you don't have any of these other tax-free events that they're adding back in. So look at your modified adjusted gross income, add half your Social Security, and then see if these charts pertain to you. So for a married couple making over $44,000, 85% of your Social Security will be taxed. Again, not at an 85% tax rate at your tax bracket. Okay, if you're an individual or married filing separately, then we're looking at your Social Security, your combined income. Yes, this is the same rule if you're on Social Security disability. Now, VA disability is tax-free. So you don't have to bring in your VA disability. But if you're on federal Social Security disability, these are the same income thresholds. Because think about it, you might be on disability and you don't make very much, but you're married and together, putting it all together, it pushes you over $44,000 and now 85% of your disability is going to be taxed on your federal income taxes. I know, it's terrible. So let's look at an individual. If you make less than $25,000, you do not have to file federal income taxes. If you make $25,000 and $1 extra, now 50% of your Social Security or disability will become taxed. So the same thing, how about you have a child getting a child survivor benefit? Will they have to pay taxes? Maybe. If they also have another side job, or some teenagers have several side jobs and they're pushing themselves over this $25,001 of combined income, yeah, their child survivor benefits could become taxed. If you are a parent, and so let's say my husband died and my 3 kids are all getting a survivor benefit, I don't have to pay taxes on their benefit. That's all on them. And typically they're going to be less than $25,000. There's no taxes. So that puts a lot of widows at ease that I don't have to include theirs. Okay, so if I make more than $34,000 as an individual, which means I'm not making that on my Social Security typically. That means I have other investment income and I have a pension. So if you have a military pension, that will drive up your taxable income, but not military disability. So I'm over $34,000, 85% of my Social Security will be taxed. And these rates that you see right here, they came up with this in the 80s. We'll go back up to married. This has never changed. This is not indexed for inflation. So to show you how tricky they are, if they would have indexed this for inflation, right? That's fair. That's how they do most things, but they didn't do it on purpose so that with inflation, more and more people will end up having their Social Security tax so that they can kind of quietly just sit back until eventually everybody's Social Security is taxed. So it's very tricky. Now, since these don't go up every year, it's easy for you to hit this target versus the Medicare IRMA target. When I talk about trying to keep your income down for the Medicare IRMA, that's indexed for inflation. That changes around. It's a little harder target to hit. You can hit this. So now your question is, how do I lower my income? So you need to have a long-term strategy, maybe a multi-year strategy before you start taking money out of your 401k, your IRA, any of your tax-deferred vehicles that will become taxable. So a lot of people, they're like, I don't want to deal with it. I retired. I'm taking my money out of my 401k. I don't want any more ties to that employer. I don't know really what I want to do with it yet, but I'm just going to stick it in my savings account. No, red flag, red flag. No, do not do that. Do not touch your money until you have a strategy. I know a lot of people are really averse to hiring a financial planner because they feel like they're going to be taken advantage of. I feel that. They don't know who to trust. I understand that. But it's worth trying to find somebody that you do trust, paying a couple $100 for a consultation so that you can save thousands of dollars on unnecessary taxes. Write that down, okay? So let's say I am going to sell my business and they could give me a cash offer and I make so much money on cash. I don't necessarily want to do that. It might be more beneficial for me to structure those settlements, stretch that out over 5 years so that I can play the game with my tax bracket. This is legal. You just have to take the time to do it. So before you realize any big gains, have a strategy. One of the most common questions I get is, when will taxes stop? There seems to be this myth in American culture that federal income taxes stop at age 70. I don't know where it came from, but I've had hundreds of people tell me now they stop at 70, right? No. As long as you're generating income, you will pay taxes forever and ever and ever. Amen. It's never going to stop. And the same thing, if you're generating wages, you will end up paying into Social Security through your FICA payroll taxes forever. That never stops. So when you think about, you got taxed on your wages, and now you're taxed on your Social Security, plus yeah, it's not beautiful, but that's our system. Don't kill the messenger. Thanks for watching. Subscribe to our channel to learn more to get ready for retirement. If you like this video, you might really like this video. Check it out. And we'd appreciate if you subscribe to our channel so you never miss a great video. We put out one every week. Check in the description below this video for a link to our cheat sheet on Social Security and Medicare. And you can also give us a comment if you have a specific question. Always feel free to call us or email us at the Medicare Family.